Good morning, everyone. I don't know why I put that live streaming animation there that covers the logo. Now, here's a note to make, and it's vital to your trading success, anybody's trading success, that you must have a plan. And if you don't have this plan, then it's important that you stop trading. The whole purpose of having this plan, okay, is to avoid giving money to the marketplace when you don't have to. Again, without the plan, you're purely gambling when it comes to trading in the marketplace. You're trading your hard-earned money with your time for absolutely no return. Yes, you get some wins here and there. Yes, you can make some profits here and there. But we're talking about over time. We're talking about the longevity of your money as a business being profitable for you consistently. We're not talking about little gambles here and there. We're not talking about little wins here and there. What we want for you, what I want for you is to be able to trade every single day in the marketplace where you have an edge known as a positive expectancy. And I talk about this all the time. And that only comes about from having that trade plan. It's important to cultivate that plan, and then even more so to trade that every single day with discipline. Because if you do this consistently, trading that every single day, if you do that consistently, then you're going to get consistent results. In the same way that you have no plan, you're going to get consistent results. How on earth are you going to make money at this every single day when you don't know that you have an edge? So over time, with consistency, those are the results that you are getting every single day. Doesn't that sound stupid? That's why I have that note all the time before we dive into the charts and before we go look for opportunities in the marketplace, that we have that plan. I get consistent results. It doesn't mean that I make money every single day. I don't make profits every single day. But what I do know, at the end of the year, my equity curve, my capital is going to be higher than what it was when I started. Right? You start at the start of the year and you trade that plan with discipline, get that consistent result, and at the end of the year, you're going to have more pips than you do than when you first started. And pips, percentage in point, is what we're trying to obtain in the markets. More pips you have, the more money you have anyway. So the true, what's this? Error message here. The true money is, it sounds counterintuitive, but when you focus on the money, greed takes over, your emotions take over, and then you end up giving that back to the marketplace anyway. But when you focus on the process over outcome, when you focus on the actions and doing those correctly every single day, the byproduct of that is that you make money anyway. See, that's why it sounds counterintuitive. But I promise you that if you just forget about the money and focus on doing the actions that bring in pips, making money will be inevitable for you. I just realized that I accidentally muted myself for 5 seconds there. Okay, that's enough of that. just stress that the importance of that, because I see this every single day, time and time again. People complaining that they are losing money in the markets. Especially now, so when it is extremely risky. We have entered the summer months here. Now it's winter over in my side of the world, but we've entered the summer months. What does that mean? What is the significance of that? It means there's hardly any liquidity in the marketplace. So there's going to be riskier, volatile moves. Okay? There's going to be hardly any moves, and then in short bursts, there's going to be massive moves. We've got 150 pips to 200 pip range moves, which can absolutely wipe people out. Yes, you can make a lot of money during those kind of moves, but we have to be extremely careful here because it can end up wiping a lot of people out. And you do see that all the time, and I don't want you being one of them. Now, the reason that I'm actually talking a lot about this before I get to the charts is there's not a lot to look at right now. I was in 3 trades yesterday. I had a total of 3 trades. We had 2 losses and 1 winner. That's it. So we were down. Where is it? Can't really see that, can you? Where is my chart here? So we are down 0.3% for the month. And we were up 4.5%, I think it was, last month. So doing really well. We are currently 1 week in to June, and I don't have much to show for it. We are down 0.3% in the red for this month. And this is going to be a tough month, especially as a pattern trader. There's been a lot of expansion in the marketplace. There's been a lot of trend moves in the marketplace right now. And I don't do a lot of trend trading. So there's not a lot of opportunities for me. And when the market is in expansion, and I do get some pattern trade setup opportunities, and I get involved, and the market is in expansion, we are going to hit our stops. That's just the way it is. So with pattern trading, what I do, we really want indecision in the marketplace. We really want consolidation in the marketplace. But when the marketplace is, when price action, I should say, is in expansion, trend trading really does come alive, and I don't do much of that. It is going to be a struggle for me. Down 103 pips. Remember, my maximum allowable drawdown is around 900 pips, to be fair. So we are within a comfortable range right now of my drawdown. Minus 33% pattern completion. Win percentage at the moment. We had one. Now, Cypher is a really good win percentage most of the time, but not right now. That is not doing well. I've had about 7 losses in a row with Cypher trades, but I will still trade it because I know, again, over time, that will produce a positive expectancy for me. Cypher was a loss, bat pattern was a win, and then we had another bat here. Which was a loss as well. Okay. Let's take a look now. Let's switch over here to the chart, see? Where is that button? Where are we? So here we are, right here. This is my X point. This is my A point. This is my B, and here is my C. And look at this. See that? Yes. Right. So we had our initial high here, and then we had to move all the way down here. Now, if we grab our Fibonacci retracement tool like this, and we go from swing high to swing low right down here, you can see that price action has come all the way up into our B point completion. Now this puts you on bat pattern alert, right? So here is the winning trade on the Aussie Yen 15 minute. So condition 1 is met because we had an A to B move, which is a Fibonacci retracement from X to A that hits the 50%. Again, you have this material inside the education area if you want to brush up on these ratios. So condition 1 was met. Moving on to condition 2. What do we need? B to C move all the way down into a minimum of a 382. Fibonacci retracement from A to B right here. Swing low to swing high. Price action comes all the way down. Again, hitting that 382, but we do complete at the 50% there. So now we have an X to A, Now we have a C to D completion right here. Fibonacci full leg of the move like this. And you can see that price action came all the way up into 886. Oops. Which is our final condition, condition 3, and that gave us the bat pattern completion. Once this happened, right here, this is my sell zone here. So once price action came all the way up into our D point completion, like giving us, where is it? D. Excuse me. Giving us our D point completion, we had a valid bat pattern opportunity. Price, and we use the if-then syntax, again, in order which events occur. That's what a syntax is. Price action comes all the way up into our D point completion at the 886. This gives me a valid sell opportunity, right? We sold the market into, that's right, a 382 Fibonacci retracement from A all the way to D. Well, actually, initially it was down here. And where is my 886? Right here. Oops, sorry. So initially my targets were here. Okay. Price action came all the way up into our D point completion. We sold at the 886. It's not a big move. I was looking for 15 pips. That's it. It's not a big trade. I'm looking for 15 pips here. Now, as price action pushes higher, again, we sold at the 886 right here. Dropping a line tool. 886 right here, we sold. Price action pushes up. And remember what happens? If price action pushes up, we roll our stops. We adjust our targets. Because again, we need to be measuring. That's what ratios do. They measure price action. So we drag the Fibonacci retracement all the way up into the high of this candle here. Okay, not the close of the candle, the wick of the candle. We roll it all the way to the high. Then we adjust our targets like this. Okay, we roll our targets. This is now at the 382. So not a, not a big move. I mean, yeah, it says 17 pips, but it's 15 pips. Just to be honest. 15 pip move. I was looking forward to a move down here where this arrow is at the 618, but we didn't quite get there. You know, that would have been a really nice move for about 30, let's just say 30 pips. For 30 pips on the balance of that position. Again, would have been good. However, we didn't get there. Now, I got lucky on this move there because, you know, the marketplace is in expansion and we just skyrocket from there, hitting new highs, and we just keep going higher and higher. Yeah. And with pattern trading, we only want, you know, this much of the move anyway. We're just looking for a bit of a retracement from price action there. But as, you know, getting back to this trade here, as price action came down and hit target 1, we took off half of our position. We traded 2 contracts here. We took off half of our position. And then we rolled stops from our 113s, which is right here. Make that red. We rolled our stops all the way down to the 886 right here, looking for that target 2 down at the 618. So if price action hits target 1 at the 382, then we take off half of our position, roll our stops to break even, and look for that continued move down into the 618. But we didn't quite get there. Now that's the recap of this trade. That was the BAT on the Aussie Yen 15-minute time frame. Intraday trading. Now we can get rid of this. Yeah, I just wanted to do the recap of that, so we can get rid of this drawing tools and then start again. At the daily, we are retesting these highs, and this is what is known as decision point here. So what does the decision point mean? Well, it means exactly that. The market is going to decide from here if we are going to hold this level. Bring in my box tool here. We're going to hold this level, or we're going to push up and close above these highs looking left. Right here. Which will give us a new structure high, and then of course we're looking even higher than that. And if we get a move back down, well then we may get some consolidation here moving sideways. So this is our low here, and this is our high. See if we can get some consolidation moving from left to right, and we may get some pattern opportunities setting up here on a lower time frame, because this is the daily time frame. Euro dollar, what's the time? 5:30. So euro dollar, not too much happening. What I want to look for here is intraday trading opportunities on the 15-minute. So what I'm looking for here is a potential cipher pattern. If we get, no we don't, because price action is pushed all the way down, closing below the 1414 right here with a Fibonacci extension right there. So if price action closed above the 1414, then we can look for a potential sell opportunity. If price action pushed all the way up into a 786, probably looking at oops, let's get rid of that anyway. Looking at a 786 right here. Again, look left and you would have had support, 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 support. So this major structure level becomes resistance. Support would become resistance right here. And then we can look for a really nice sell opportunity towards the downside. However, again, price action closed below that 1414, making the potential cipher invalid before it even set up for us to take advantage from. Other than that, not really looking for anything. I mean, you know, we are bearish on the euro dollar here right now. Price action moving from top left down to the bottom right. If we get a move up into this level, still looking for a potential sell opportunity right there at 1.0710 price action level. So that's a euro dollar. Oh yeah, euro yen. Euro yen making new highs on the daily, continuing to press high here. We actually got a this is a crab pattern. We're looking for a sell opportunity here, but there is nothing in my trade plan. Remember, I talked about that earlier in the session. There's nothing in my trade plan that allows me to sell this at that level. And why can't I sell it right now? Well, you know, because I haven't backtested the crab pattern on the euro yen. So I wouldn't know if I sold this. I wouldn't know that over time this was actually profitable for me. Therefore, I can't trade it. It's as simple as that. And on the, on the 15, you know, nothing setting up for us there either or. Euro yen for hour, not too much.